Hello, hello. Good morning, everybody. I hope you guys are all doing lovely today. My name is Jason Krutzky. It is a pleasure to be with you this Thursday morning. It's May the 4th. May the 4th be with you all. I'm not really a Star Wars guy, but to those of you who are, to those of you who celebrate, May the 4th be with you. We had a huge day yesterday, FOMC day. Don't know how many of you guys tuned in for the live stream. We were here for a couple of hours, hanging out, listening to Jerome Powell. And then after that, we hosted a Twitter space with a bunch of smart folks. The conversation got a little heated, but it was a good conversation. We learned quite a few things. Lots of varying opinions there too. You know, some folks pretty concerned about what's going on with these regional banks. Other folks not concerned at all. So it's kind of interesting to get that back and forth as to maybe why we should or shouldn't be concerned, whether or not Powell is concerned. I'm curious, how are you guys doing this morning? There's just a few of you here. I hope you guys are doing well. I've got the QQQ chart pulled up, and the reason why I've got it pulled up this morning is specifically because of this anchored VWAP from these all-time highs. We're at a really big spot. We're at an inflection point, I would call it. Zoom in here so you guys can kind of see it. That anchored VWAP has been pretty nice resistance for quite a long time, really, since the all-time highs. Initially, when we were first coming off those highs, I don't really take this too much into account because it was still kind of building. But nice resistance here back in March of last year, kind of perfect resistance in August of last year. Zoom in tighter. And over the past couple of weeks, we've managed to managed to push through it. And so now we're coming back and we're testing it. And what we do here, I think, is pretty important. If we're able to hold and maybe even come back in and make another new high relative to kind of these past two, the April 4th high and the May 1st high, if we can come back and make a new high here, I think that's gonna be a big change of trend for this guy. I'm not saying it's gonna happen, but anything's possible, right? It could. So that's kind of what I got my eye on here this morning, is really watching this anchored VWAP close on the Qs. If we go to the SPY, kind of at a relatively similar spot, anchored VWAP from the highs on the SPY, not as perfect resistance as it's been on the Qs, but still pretty important spot. Back in August of last year, back in December of last year, we managed to gain it and hold it initially in February, and then they sold it off. So it didn't end up holding, and they've been holding it now since April 10th. They held it, and then they held it back in April 27th. And yesterday we got a close below it. So again, they're really trying to hold on. Remember, this represents all of your, this represents the average price paid by all of your buyers from the all-time high. So if price is above this level, that means that everybody who's bought since the all-time high on average is in the money. And if it's below, then everybody who's bought since the all-time high on average is losing on the trade. And you got to think about the psychology of these things, right? If on average everybody's in the money, what are the odds that they're going to continue holding for higher prices? Well, they're probably pretty good. And if everybody's losing on the trade and price comes back to their break-even spot, what are the odds that they're going to sell into that? Well, the odds are pretty good. Ultimately, this level represents just a big inflection point, a big, a push and pull. We highlighted it last week when the month closed. But let me show you guys this, if anybody missed it. We had a blue doji raindrop on the Qs last month, and for those of you who are not familiar with these raindrop candles, I'm happy to give you a brief synopsis on them. Essentially, they're volume-weighted candles. So the left-hand side shows you a contour, right? The right-hand side shows you a contour. So these candles are split into two sides. The left-hand side represents the first half of the time frame, whatever time frame you happen to be on. The right-hand side represents the second half of the time frame, and the contour represents the distribution of the volume. There's little horizontal bars on either side. The horizontal bar bars are the VWAPs for each half of the time frame. So what we see here in essence is the VWAP on the first half of last month is at the exact same level as the VWAP on the second half of the month. When you have this equal weighting of the VWAP or equal positioning of the VWAP, essentially what you're seeing is like a true tug of war between buyers and sellers. Nobody's in control. When you have a green candle, what has happened is buyers have pushed the price up. So the average price paid in the first half of the month is less than the average price paid in the second half of the month. Prices increase or average price increase, and you get a green candle. And the opposite is true when you have a red one. The average price paid decreases. In this case, over the first half of the month. In any other time frame, it's over that time frame. Well, if we go back in time and we look at the Qs, look how far back we got to go to find another blue doji raindrop on the monthly time frame. August 2015, 8 years almost, like 7.5 years of data since we've had this sort of indecision on the Qs. So that just goes to tell you how unsure this market is about the price action right now. You know, these blue dojis don't tell you the direction that price is going to go after they occur. They just tell you that there's a lot of indecision, and generally indecision will lead to volatility, simply because if you think about what indecision is sideways action, right? In order to create one of these, it would be a lot harder to create a blue doji through a very, very volatile period where prices, zigzagging higher and lower. It's much easier to create this when prices kind of going sideways. And that's what we've saw really over the past several weeks on the Qs. We saw price go sideways, and that sideways action again representing indecision. So you zoom out and you can see, so this is the weekly, and you can kind of see where these blue dojis appear. Sometimes they appear like here at previous highs when there's a decision to make. Are we going to continue going higher? Are we going to pause here and reverse? Sometimes they appear at highs. Sometimes they appear at the beginning of consolidation periods. Sometimes they appear at the end of consolidation periods. It's different. There are different scenarios there. But just the simple fact that one appeared on the monthly is quite rare. We've only seen in the Qs, in the history of the Qs, we've seen, I think, 7 of these things. One in 2006, one in 2009. We had 2 back-to-back in March and April of, that's kind of interesting. I guess this is March and April of 2013. And May 2015, August 2015, and haven't seen one since. So you're talking about 6, 7 other times where we've had one of these blue dojis, and we had one here. So I think this is pretty important. I don't know the way that this is going to resolve, but the fact that it appeared, I think, is pretty darn interesting. Haven't heard from any of you guys yet in the chat. I would love to hear from some of you guys. How is everybody doing today? What are your expectations for the day? We've got Apple earnings coming up after the bell, I believe. And I know that tech, people following tech are, that's obviously the biggest, maybe the biggest name in tech. Maybe they transcend tech at this point. Like we were talking about this last night in the space, how Apple is just maybe the greatest brand of all time. Simple as that they're beyond tech at this point. What are you guys thinking? Are you guys thinking that we're going to get that whatever comes out of Apple today is going to push the markets in the direction? Are the markets waiting for Apple to report to make a move? I don't know. I'm kind of wondering if that might be the case myself. I guess we'll find out after hours today. But Apple, if you have not hung out with me at all this week, Apple is at a key inflection point from what I can tell. If you're just talking about basic trend, we've been in a downtrend since the all-time highs. I've got the weekly chart up here. You've got a lower high relative to the all-time high back in March of 2022. We make a new low relative to the low that brought us up to that lower high in March. So we make a new low in June. We run all the way back up and we test those previous March highs in August. We fail at them. What do? We come all the way back down. Initially, they tried to hold these lows. In October of last year, they tried to hold these lows, but what did they ultimately do? They got rejected at the anchored VWAP from the all-time high, and they went and they made a proper new low. So if you're following trend, your expectation is that when they come back up to this lower high up here, and it could be here, it could be here, just up into this area, you would anticipate that a rejection would occur simply because they made a new low. You would expect the trend to continue, right? Trends continue until they change. So a big inflection point here for Apple. If they can make a new high, then that's going to tell us a whole heck of a lot about what we should expect. If they can make a new high here, even if they bring it all the way back down to those previous lows, the basics of trend would tell you that it should hold down here and it should make a higher low. Now, I'm not saying it's going to do that. I'm just saying that that's the expectation that this might set up. All kinds of things could happen. They could make a new high here. Hold on one sec. They can make a new high here and then come back into this anchored VWAP. You know, over time, this anchored VWAP, if they make a new high and they start pulling back, this anchored VWAP is going to slowly rise, right? They could come back into it and maybe find support at it, right? Or they could come back to maybe over in here and find support there. But that's the big idea, is that ultimately, if they make a new high relative to this guy, that is a change of trend. That's a big change of trend. That would represent something really important. And that would suggest, you know, maybe potential further upside for the Qs. Possibly, I don't know. What are y'all thoughts? What's up, Austin? So I didn't even catch that Apple sold off after hours. Let me see here. I mean, you know, the bank news that came in. Whoa, it did. The bank news that came in really seemed to spook the markets. With what were the banks? I can't remember. Western Alliance and Pacific, PBC or PAC or whatever it was. That stuff seemed to really spook the markets. And we saw, I mean, you saw pullbacks on everything and then a nice bounce overnight. But let me see. I know the Qs tested the overnight lows, or at least NQ tested the overnight lows just a short time ago. And they held them. Your overnight low here. So they gapped down and then they ran it all like until what, like evening time, 9 o'clock, 10 o'clock, something like that. Maybe even a little bit later. And now they've come back in and held. So what they do here is pretty important. PACW, that was it. 88, what's happening, man? In the famous words of of the Steve Miller Band, trying to loosen my load. Net seller of puts. In Apple, every one of us is wondering about the cash position. Are they going to keep buybacks? Yeah, we're going to have to keep an eye on that. You know, I didn't quite realize the guys on the space yesterday were talking about, they haven't guided since like 2020. Some folks were asking if they might guide, and I think the general consensus was that why do they need to? Do they need to at all? But they presumably they'll talk about their cash position, and will they keep the buybacks? So is your theory that if they don't keep the buybacks, things are going to turn south for Apple pretty quickly? Is that what you're thinking? Or if the cash position has maybe they've unloaded some of their cash somehow, somewhere? I don't see how they wouldn't have still a quite a sizable cash position, if not greater than whatever it was last time they reported. 90 billion worth of buybacks. Interesting. What does that represent relative to the outstanding float? I don't know anything about the Qualcomm handset. The guys on the space were talking about it last night, but it was a little over my head if I'm completely honest about it. Qualcomm looking in a really rough position here. This is like a make or break spot for Qualcomm. Seems like to me. Let me go bigger. Time frame. It doesn't look super good on Qualcomm, does it? Curious to know. Yeah, so where I would have my eye with Qualcomm is down here at the lows. This guy, somewhere thereabouts, or maybe even here. You got a lot of really, fair value gaps chilling in here. I would imagine that there's not a ton of volume. Let me see. Oops. Yeah, not a ton of volume down here. So Qualcomm is basically saying they expect handset chip sales to slow in the future quarters. Apple hasn't had any new breaking products. You love a crowded trade and take the contrarian view. I mean, dude, if there is a crowded trade out there, you got to assume it's Apple, right? Apple is the flight to safety. Is it not? I mean, historically, it's where big money goes to hide out when things get bad. It was Qualcomm comments about low mobile phone sales on the ER call that took Apple down. Got it. Okay. Thank you for clarifying that, Dustin. Yeah, all of the regionals got hammered for sure. We were talking about, we've talked about it a ton. The XLF level. What is it trading at this morning? Trading 31.77. Those lows that we've been coming into for the past almost a year, really, really important. Yeah, gold caught a bid yesterday, right? We were watching XAU GLD or XAU USD on the live yesterday. Did it make a new all-time high? It tried to. It got darn close. Like within pennies. And then, sorry guys. And crypto too, right? Crypto caught a little bit of a bid yesterday. There you go, deep dive dot. I'm glad that TrendSpider helps you figure that stuff out. Yeah, but Bitcoin caught a little bit of a bid. I don't know if ETH did. I think ETH did. Yeah, a little bit of a bid there. Thoughts on Tesla? Let's see. So back some weeks ago, we were talking about this level. This was back when, this was back in February. And why were we talking about this level? Inverse head and shoulders kind of thing setting up, and also because they gained this high, right? So they gained the high. You can see. Right, they got above it, they held it, and then they brought it lower. And so that set up a bit of a expectation that there might be a trade off of this. And they did. They held it nicely. And now essentially what you're seeing is the reverse of that, right? They held it. They failed a new high. We really wanted to see this make a new high, but they failed a new high. So they went back and they made a new low. So Can it bounce here and continue a little bit higher? I think it probably could. If it does, there's a couple of places I would be watching. I would be watching this level, this 195 spot, or 196.5 would be a first spot that I'd be keeping an eye on. They kind of tested it already in here. So, you know, different. I'm always looking for levels that haven't been tested yet. That's kind of my thought. And when I look higher and look for levels that haven't been tested yet, the main ones that I see are pretty obvious. The anchored VWAP from the lows. You know, it was nice support here. This was another thing that gave us a little bit of confidence about this level holding, was the anchored VWAP was there too. So the anchored VWAP has been a nice spot twice as support. Maybe we get a move back into it, 175.25. But then there's also this too. There's kind of a spot in here closer to like 183, 184. That's untested. They just kind of like dumped right through it and haven't come back to test it. So we might look for that. And then depending on your risk aversion, you know, you could try at the anchored VWAP, you could try here, you could try even up here, and you'd utilize old highs as spots to know that you were wrong. If price was able to get up and through them, but I don't know. I don't have the greatest feeling about it here. But they did just make new lows over the past week, and they're consolidating. They could push it higher, at least short term. A bigger time frame. Bigger time frame, it's kind of a pretty easy to see support resistance flip, right? You had nice support in this 204 spot. That took you all the way up to the highs. They bounced 204, 205 on the pullback, right? And then they broke it, and now they've tested it, and they're beginning to reject it. So either they get back up and over it, or they're probably going for more lows, because you have a lot of stuff in here that's untested too, technically. They never came back into any of this stuff to see if it holds. So, like, I don't know. Ultimately, if they can't get up and over this and start, you know, making new highs again, you got to assume they're going to go down and test something quite lower. Yeah, Dustin, we got the same, essentially same kind of idea, kind of where my head's at. I don't know. I mean, I think it's all about what's going on with the rest of the market, you know. If we look at QQQ is in a tricky spot. But you know, this to me is really important. Up and over the anchored VWAP from the COVID lows. Like, that's only been going on for a couple of months. You know, they've been trying to find their way back up and over it for a while. And that to me is pretty important. If we draw a fib, I think we're at like the 50% retrace. Oh, we're over it. 3.82. So on a longer term time frame, you know, they held the 618 almost to the penny. If you're a wave trader, and we talk about like a good wave trading account to follow is my friend Alex at Sestrian Inc. At Sestrian Inc. I can share his. He's got a pretty bullish outlook on all things tech. And he's got a pretty good understanding of Elliott wave theory. Let me share this with you. How easy is it to program Market Scanner? It's as easy as can be, in my opinion, but I've been working with it for a while. The thing that I try to explain to people about the scanner is, like, if you can think it, you can probably script it. But let's talk about what you want to script. What types of conditions are you looking for? 88. Because understanding what you're looking for is so key. And I think that's really kind of the hurdle that most people have to jump. It's not understanding how to script. It's understanding specifically what you're looking for. Identify price action outside a reversion. Give me a little bit more clarity on it. Like let's get real specific. The more specific you can be, the easier it's going to be for me to help you. While I hang out waiting on that, I'm just going to pop back into a lower time frame here and have a look around. How's PNC looking today? Or what is it? What at PACW? Well, it's rallying a little bit. Found a little bit of support, but everyone across the board seems to think this thing's going to zero. Let's check WAL. Have any of y'all actually traded these names? Ooh, 26 bucks. That's a long way from zero. Zion. I'm not trying to be elusive, 88. I want to help you, and I'm certain that I can. I just need to know a little bit more about specifics of what you're looking for. Even if you can show me on a chart. Like if you can give me a chart example, like if there's a particular ticker that's doing what you're looking for right now, or did it yesterday or something like that, you know? Like what time frame are you looking on? How do you define reversion? What are you using to identify reversion? Are you looking for price relative to a VWAP? Are you looking for, I don't know, what are you looking for? Here's one, a VWAP to price. There's a premium versus discount. Let's say VWAP is 100 and price is 113. So you would want to define price relative to VWAP. Yeah, so you can't use price. You can't say price is $3 from VWAP, but you can use percentages. I actually do this quite a bit. So usually what I'll do is like on a small time frame, I'll say something like 5-minute price close, less than indicator, 5-minute VWAP. And then I'll say buy at least X, and maybe like I don't know, 1.5% or something like that. I'll use percentages. Let's see if there's anything out there. Oops. This just needs to be 1.5. Sorry, my bad. Nothing in the Dow Jones 30. I'm trying to keep the list small because it's just one parameter. Let's use extended hours data too. Oops. Yeah, VWAP. Qualcomm, USB, WFC. So this is how I do it. I would look for this price relative to VWAP by X, price less than VWAP by at least X percent. That's how I'd be thinking about it, 88. And you could define this by whatever percentage value you want. Obviously, the farther you are away, the less names you're going to get, of course. But when it comes to just like intraday VWAP reversion to the mean type things, 1.5% to 2% is a pretty decent starting point, I think, depending on the name, right? The bigger name, like an index ETF, SPY, QQQ, whatever, that thing does not get 2% away from its intraday VWAP. They do not do that often. So actually what I would do in this scenario is, scanner's real time for sure. And then it's just a matter of, do you want to utilize extended hours data or not? So because we're not in extended hours anymore. So I tend not to use extended hours data because it's just, weird things can happen in extended hours. And I also tend not to trade during them. But so I would keep this extended hours turned off, and then make sure your current candle's toggled on. If your current candle's not toggled on here, depending on whatever time frame you have, it's going to be looking at the most recently closed candle. So the most recently closed 5-minute candle, because the market just opened, is yesterday's last 5-minute candle of the open session. So keep that in mind. When this 5-minute candle closes at 9:35, 7:35, whatever time it is for you, then you run this scan, then it's going to look at literally the first 5-minute candle of the day. So what I would do with this, honestly, because a mean reversion trade sets up, right? Like it doesn't just instantly bounce at when it hits 1% away above or below its VWAP or whatever, or 2%. It takes a moment for these things to kind of play out. So what you might want to do is you might want to utilize this as an alert. So like, for example, what I would do, actually I have this alert on SPY and QQQ for this exact reason. I create multi-factor alerts and I say 5-minute price close greater than indicator 5-minute VWAP by at least, let's say, like 1.5%. And then I also say 5-minute price close less than indicator 5-minute VWAP by at least 1.5%. And then I change this to any of the following. So either you're extended to the upside from the VWAP, or you're extended to the downside from the VWAP. And let's just say, like, I don't know, just call it extended or something. Call it whatever you want. Set your expiry for however many days you want. And then I always max out these triggers. So I'll max out my expiry and I max out, I want more days. I max out my expiry and I max out my triggers. So I got 99 days, 20 triggers. So over the next 99 days, the next 20 times that, in this case, Nike is super extended from its VWAP on the 5-minute, I'm going to get an alert to let me know. And that way I don't even have to think about it. Alerts will come as they come. This just makes it kind of simpler. Yeah, so VWAP will reset every day. It just resets at the start of each day. It's not going to reset intraday. And you could take this a step farther too if you wanted. Like you could say extended from an anchored VWAP from the start of the week or something, right? Like you could go wild with this, and you could use different time frames too. You don't have to just set it to 5-minute. You could set it to 15 or whatever. Completely up to you. No rules. in that way. Well, I guess there are some rules. You can only use up to 4 time frames per alert, 4 time frames per scan. So there are limitations in how many time frames you can use at once. But I don't know, 4 is a lot. And most setups, you're probably not going to need more than 4 time frames. I don't see how you would need more than 4 time frames. Because there's workarounds for just about everything. So this is what I would do, my friend, if I were you. Once you create this alert, so one cool thing about multi-factor alerts, so I've just now created this alert on Apple. I go to my alerts widget here. I'm going to add it just so you can see it. Nike is extended, right? So if I wanted to, I could go to the SPY chart and I could come over to my Nike extended multi-factor alert. And when I hover over it, you see how I got these 4 icons here. This icon in the top left, it looks like a piece of paper with the corner folded down. If I click that, it's going to essentially copy the alert that I just made for Nike onto whatever ticker I have on my chart. And I have SPY up. So here it says create multi-factor alert on SPY. Let me know when either of these two things happen. I'll just remove that copy from the title, say create alert. And now that same exact alert's on SPY. So if I had, I don't know, if I had a watch list of names, let's say, you know, my Jason Close watch, and I wanted to add it to these names, click on a name, click on the copy. I'm just going to, again, change the title, say create alert. And I could just go down the list here if I wanted to and add this alert to every name on my list pretty quickly. You can see why I removed that copy from the title, because it keeps copying the copy into the title. And that's really annoying to me. Does that make sense? And then you could like pair that with other stuff too. But I think it's a good starting point just to be getting alerted on that stuff. And if you want to, dude, you can even go back and test it. Right? Like, for example, price close greater than indicator VWAP by at least, let's say, 2%. We're going to get in on a 5-minute candle. Let me change this. I'm just going to go to the SPY here. You could actually go back and test and see, how does this work? If it gets extended 2% from the VWAP, what happens 10 candles later? I don't know. Let's see. I'm taking a long trade here. So it hasn't happened. In 4 months, we've not seen this happen intraday where it got more than 2%. Let's try 1.5. Interesting. Let's try 1%. So it really hasn't happened that much. This is why I was saying, like, it doesn't get super extended. These big indices, it's very rare that they get super extended. But this long trade wouldn't have worked. Let's try the hourly. All right, so on the hourly, when price closes at least 1% above the VWAP and we go short and we exit 10 candles later, you would have taken 42 positions. Your win rate's 52%. Your average win is 2.7%, but your average loss is negative 2.1. So your average return 0.41%. You could cut this down a little bit, maybe. Take a few less, stay in the trade a little bit shorter. Take a few more positions. Your win rate goes down by 1%. Your average win goes down by almost 1.5%. Essentially, there's no meat on this bone. Let's say 1.25. you might end up finding that when it gets extended, that it's like, people trade using Bollinger Bands, and a relatively common understanding of Bollinger Bands is that when price gets to the top of the Bollinger Band, that's a time to short. But John Bollinger says that's not a time to short at all. That's a time to be looking for long opportunities. Like, that's suggesting strength, and price moving, pushing away from a VWAP like that actually might be suggesting more strength than you realize. You just got to go back and run tests and see. Like, instead of getting out when after 10 candles, what if you got out something like trend following? You say price close less than some sort of like short term simple moving average or something, like an 8 or 8 SMA or EMA is one that I hear a lot. So I want to go long instead here. Less positions, your performance went up. So there's not really a big enough sample size here. 22 positions is not that many. We really recommend, when it comes to strategy testing, we recommend at least 50. Yeah, well, Bollinger just says that price coming into an upper Bollinger Band can be very bullish. I think it's just a common misconception that you're supposed to short into those things. It's going to be different for every name, though, and different for market conditions. I think price going into an upper Bollinger Band when price is in an uptrend is quite more bullish than price coming into an upper Bollinger Band when price is in a downtrend. I think they're two different scenarios. But you could define that, right? Like, you could say, for example, let's say VWAP, I'm just using VWAP here, is greater than indicator VWAP X candles ago, right? How do you define an uptrend? Well, this is one way. You could say the current VWAP is higher than it was 10 candles ago. You could also say indicator VWAP greater than indicator VWAP. Make this 10, make this 20. If you need like multiple candles of confirmation, VWAP is increasing. You could say that for any indicator. You could say it for the top of the Bollinger Band, the top line. You could say it for the middle Bollinger Band. You could say it for a moving average, whatever. You can define price relative to it. Lots of things you can do. It's really, really more so a matter of knowing what you're looking for and getting very specific with it. The more specific you can be, the easier it is to script. At least that's my experience. What are markets doing right now? Ooh. Yikes. Gap down open. Ugly. SPY coming into a gap, huh? Might be an interesting spot. ES kind of filled that gap already, but might be an interesting spot here. Yeah, you think so? It's possible. The thing that I see, though, I see this. I see a giant Head and Shoulders. Because here's your low. Right here. Here's the left shoulder, potentially. This is what took you up to take you to the lows. And then we gained all this. So we made a new high. So you would anticipate that they could hold this here. Whether they will or not, I don't know. So many more factors at play than just like the technicals. Remember, news and things like that can destroy technicals in a split second. Oh yeah, mother bar. Let's talk mother bars. Tell me about them. I hear this term all the time, and admittedly, I'm not familiar with it. Yeah, maybe they're going for this anchored VWAP from the lows. I mean, they're so close. They're so close to 403.89. You got to assume there's tons of stops down here. But they made a new high. Is what they did up here enough? I don't know. Consolidate the bar from the low to the high. Look at it as one bar. Okay. So you're saying like that? Like this is one bar? Excuse me. Oh. That's not what you're saying. Oh, you're saying this is one bar. Ah, interesting. Got it. Okay. Huh. And why do you call this a mother bar? I don't really understand. I do understand certain things about the strat, but the mother bar thing I don't. Just a range for me, and then you would look at some averages, and say if price is above, stay long, and vice versa. I mean, that sounds like fibs. No? Doesn't that kind of sound like fibs? Kind of sounds like fibs to me. like you're thinking like this. I know Sarah talks a lot about the 50% rule, right? Ah, see, they're bouncing it now. They just took they just swiped the pre-market lows on ES. Or I'm sorry, not the pre-market lows, the opening. Actually, when ES opened, I'll show you guys what I'm looking at here. Got too many screens. But they just swiped these lows. So lots of liquidity down here. And then that same idea. Go to hourly. Yeah, not as clean here, huh? Actually, on ES, it's really kind of more here. It's interesting how much different SPY and ES look. But would you agree, though, that what you're saying is kind of like fibs? Like, would you say that if we broke below the 50% retrace, then we're probably going to take it all the way? We're probably going to go down and test the whole other side of the range? Is that where your head's at? Like, at what point, what's tricky for me is, like, at what point, if you, like, right now, this is just a bit of a retrace. This isn't real. If you're looking at this whole section of price action, this is just a very small retrace of this whole section of price action. So at what point, so you're not technically, you're not willing to be short yet, right? Because you're just retracing a little bit of the price action that we've just gone through. You come into 50, you come into 0.618. These let you know, hey, we're retracing maybe more than you think we should. The problem for me is that you come into 50 or you come into 0.618 and you would anticipate maybe some bounces. So then I don't know, how do you decide when to be actually going short? Because you can't go short on that 50%, on that. If price comes to this 50% retrace, seems kind of wild to go short here. Seems like you would want to wait for a bounce and then a retest higher to go short. These look like better long opportunities here to me. But, you know, I don't know. That's just me. That's where VWAPs come into play. Got it. Excuse me. Yeah, they're starting to balance it now. Trying to anyway. Right at that spot. Like, pretty clean. Thank you. Do I like to look at volume in my trading, like on balance volume or other types? Fibonacci is only a retracement tool anyway against the market maker trend. Thank you, Deep Dive, for the bless you. Yeah, so I do look at volume. I've got a really great book called Volume Price Analysis. Let me grab it. I'll show you guys so you can see. This is the book. A Complete Guide to Volume Price Analysis by Anna Cooling. If you have not read this book, this is worth your time. Thank you, Steve. Appreciate it. Yeah, so I like to look at volume at key spots. You know, you want to see volume come in to help confirm moves. Volume climaxes is something that people talk a lot about. To know, how do you know when selling or buying is over? In some cases, you'll see volume really pump at highs and lows. Only if it comes with a trend. Well, I can't hook you up with a TrendSpider hat because you buy a book. I'm not promoting the book other than I found it to be helpful. But I'll tell you what, we do from time to time have like competitions, guess the close, guess the open, those sorts of things on these live streams. Maybe the next one I do, I'll give away some TrendSpider merch. If you win that, you'll get it for free. Oh, no. I did not write the book. Definitely did not write the book. I am not Anna Cooling. But it is a cool book, and it's pretty cheap. I know a lot of technical analysis books are kind of expensive, but this one isn't that expensive. It's pretty cheap. You might even be able to find it online for free. It's short. It's an easy read. Let's just throw up a volume here real quick. I just want to kind of see. Yeah, volume didn't really confirm here. The thing about it is it just doesn't happen all the time. You know, not every level, even a good level that bounces. I mean, this one was good for $1. Like this probably would have been what, 10% on a day on a 0 DTE, maybe a little bit more than that. Just that quick bounce. You know, not every level is going to have that same sort of volume associated with it. Sometimes levels are just technical market, you know, like intra-market levels, things that need to get tested. Because levels do need to get tested, you know. Having confirmation, though, having multiple things confirming is certainly helpful. Most people would point to this gap, right? And the gap is important. They just filled the gap, so they bounced it. But to me, this is the reason for the season here. It's all about this setup. This is like one of my favorite little setups to play, this inverse head and shoulders and head and shoulders. And it's all about what's gained and what's lost. So like they essentially, you have this high that was in between your low and the proper low. This was the low before you made a new high, right? Because we got up and over this. So at some point they were going to have to come back and test this level. You got even more confirmation because if you go bigger, you go to here all the way down, right? Because before that, you were in an uptrend. You were going higher. So this is your highest high before you went all the way down to your low here. Well, we gained that too. Didn't we? We got up and over it and we held it. So even though we lost it, we gained it because we held. If this was just like wicked through and then we went lower, then you could anticipate something different. But because we actually held it, and we held it for a decent amount of time. I mean, we're on the 15-minute time frame here. So we held it for a good, you know, probably what, day. So this gives me even more confidence in this level bouncing. And you have a nice spot to work off of too. You know, this is your stop. Because technically, even though it doesn't seem like this is what's going to happen now, technically speaking, if this actually holds, you could go all the way back up and make a new high. So when you think about risk reward, I mean, look at what you're risking. Like, you're risking nothing relative to what you stand to gain if this ends up working out. Your R is almost 9. Huge R. Will this happen? I don't know. But the goal is just looking for good R trades. It's an interesting spot, though. Then you look bigger, right? You look bigger time frame, and you see this, and you go, oh, well, we didn't make a new high. This is where multi-time frame analysis is so key, right? We didn't make a new high. Had we made a new high relative to this one, then that would make this even more compelling. The fact that we didn't makes it less compelling. But for example, like, you go a little bit, zoom a little bit out, and you see this, right? And what do you have? Kind of an untested level. So this could maybe play eventually at some point. I don't know. Honestly, okay, so I accidentally have 2 RSIs. Just RSI and volume. That's it. I really don't use a lot of indicators personally because this is how I trade. I trade like more structurally. Indicators are nice and you know, they can certainly be helpful. They're a lot easier to test than this type of trading. This type of trading is really, really difficult to test. You can test it to some degree. You can use zigzag to test to some degree, but it's actually, no, you can't. Zigzag is constantly changing. Yeah, so that's kind of how I think about using indicators. I think about using them for confirmation. I mean, divergences for sure. I'm with you on that. I'm always hunting divergences, especially when we're coming into places that I think should or could bounce or reject. Looking for, I mean, you've got a big divergence right now on SPY. Do you not? You got these lower lows, but you got some higher lows in RSI. Again, there's just a 15-minute time frame, so, you know, take it for what it is. It's a small time frame. So you just have to think about the fact that we're looking at a small time frame, and this stuff can get easily negated. How best you can use TrendSpider for finding stocks for options trading? I am on a trial, but not seeing I can achieve something from TrendSpider. So, all right, I'm not exactly certain what you're trying to look for with options, but what I would, where I would point you in the direction of is the data flow widget, and then unusual options. And then what you could do is you could like say, we could filter this. Contains olive, above underscore ask, sweep. Well, we'll just say above ask and sweeps. So sweeps mean they're trying to they're utilizing different exchanges to get multiple orders in, and the fact that they're paying above the ask is suggesting that they're just wanting to get in. They're willing to pay whatever they need to pay to get in. And when you filter by this, you get a list of all of the names that have that happening. So gold, May 5th calls, the 190 strike. You've got a bullish sweep above the ask on those on the 190 calls on GLD. This would be, I think, your best bet. This is the best way to find everything that's going on right now. This is real time. So keep that in mind. This is real time. So these are going to change. The more you filter, the less they change, but they will change. As new things meet the criteria, they're going to come and add to the list. It gives you a list of the most recent 200. And this is unusual options. This is not all options. This is any options order over $25,000. So presumably this is more impactful, right? More meaningful. So if you're looking for longs, whether you're looking for longs or shorts, this would be your way. And then you can click on the ticker symbol here, and it's going to jump to the chart. You can also, there's an unusual options widget, which I would assume that you've seen, but if you haven't, I can kind of walk you through it real quick. So right here, there's a little crosshairs that allows you to expand this view. So this is like an unfiltered view of all of the past, the most recent 200 unusual options orders on USB. And you could filter this down. So generally what I'll do is I'll filter down the time by quite a bit, maybe like 2-3 months out. You can filter out the premium. So if you want to see just bigger orders, you would want to slide the bar this way. If you want to remove the bigger orders, just see the smaller ones, slide the bar this way. And then strike price. And generally with strike price, depending on what it is that I'm looking at, strike prices, I'm going to keep a little bit closer to the current price. So like UBS is trading at what? $27 right now. So there's unusual options orders all the way down to 17.5, but it's trading 27. So maybe I'm interested in like 25 to 30 or something. UBS may be a unique circumstance because it's one of these banks, and you know, people are probably positioning for the end of the world on all of them. But you filter out for the sake of just being able to glean a little bit more clarity. There's a lot of noise if you see everything until 2025. But if you're trading a 5-minute candle, who cares? You know, like you could argue it's only worth it just to see what's going on in May, what the positioning is in May. But I personally, I actually think maybe the most powerful piece of this, yeah, for sure, tons of noise. But you can filter out the noise by defining certain things about the orders, specifically above ask, sweep, right? Because if they're sweeping above the ask, that means they're just trying to get in. And then you can look at the size relative to the open interest. Yeah, you're welcome, Steve. I mean, ultimately, we still don't know. Even if we're hunting down just the stuff that's above the ask, the sweeps, we still don't know for sure, like for sure, that that call buying is actually call buying. We don't know that for sure. It's just you're giving more strength to the idea. But guys, I am at the end of my hour here. So I'm probably gonna get out of here. Let me get you guys something. If anybody here, there's only a few of you here. My guess is that most of you are TrendSpider users. If anybody is not a TrendSpider user and you'd like a discount, here's 35% off. Yeah, no problem at all. Happy to do it. If you guys have questions, I'm here to answer them. That's what I'm here for. So if there's other stuff you're curious about, I will stick around. But if there are no other questions, then I'm going to get on to the next part of my day here and keep working on my next projects. I am going to tell you guys a little bit of bad news, but not like super bad. It'll be just fine. I'm probably going to stop doing these pre-market poll shows Tuesday, Thursdays. Just seemingly not enough interest in them. My Twitter handle at Krutzky Trades right here. I am always around. You guys can hit me up anytime with questions. 88, like that question about extended away from RSI. Like you can DM me and ask me how to do that, and I'll let you know. Right. So like anytime you guys have questions, feel free to hit me up. I'm still gonna do live streams, but just less often. Probably just for events. So like if I hadn't done any pre-markets, I would probably be doing Apple Live. I'm going to be live for CPI next Wednesday. So still going to be around, just not quite as regularly. Going to focus on video, more like evergreen video content, try and teach you guys more stuff. But yeah, keep the alerts on. Like I said, I'm still going to be doing these, just maybe a little bit more focused on big events that people are keeping their eyes on. So with that, guys, it has been a pleasure doing these. And I do appreciate you guys tuning in and asking questions, because, again, that's what I'm here for. So, again, hit me up if you have anything else. Feel free to reach out. Stephen M., thank you for giving us a go, man. I hope that you're able to find value in the platform, and I hope it's able to help you. If you ever have any questions, like I said, feel free to hit me up on Twitter. And then down here, bottom right-hand corner, contact us button is a direct feed into our employee chat room. We have live employees in chat every day, Monday through Sunday. There's almost always someone around who can answer a question for you. If you have a question, do not hesitate to hit these guys up. That's what they're there for. So I'm going to sign off. If you plan Apple earnings today, good luck to you. I hope that that you pick the right move there. And yeah, it's been a pleasure. Holler if you need me. I will be around. Have a great rest of your day, and hopefully we'll see some of you guys next Wednesday for the CPI data announcement. We're going to try and reschedule Russ to come on and teach us about the strategy tester for that too. So give me a follow on Twitter. You'll know that it's going on. I'll let everybody know. Yeah, have a great rest of your day, guys. We'll see you soon.